chapter. So I can send it out. So classes, and we have looking for Melanie. Yes. How do you say your last name, Melanie?
Condor.
Condor.
Condor with the ER.
Let's see here. You have your reports, you have your chart of accounts. See your chart of accounts. And which one you said accumulated depreciation?
6240 and 6245. It looks like they turned out to be sub accounts.
Depreciation expense. Yeah, those don't make any sense to be under telephone and internet expense.
Yeah, that's just the way it kind of matched up under QuickBooks. So should I just deactivate them, or is there a way to?
You can just edit them. And
is there a way to make them not a sub account?
Yep, let me share my screen. Safari, chart of accounts, share. Let me know if you can see my screen or not.
Yes, I can.
So we're in the chart of accounts. We can find these ones and you can see that they're indented a little to the right. You can come over here and just say edit, pull it up and say save under account. And here you can just put it under expenses. So it'll be under account expenses.
Oh, that was
and then hit save. And this is, let's see here, what is depreciation expense? What would work for this? Other. Finance costs. Yeah, let's do other business expenses. And then the other one I'll let you handle, but yeah,
okay.
You can just edit it and change that so it'll show under expenses.
All right.
On your P&L report.
All right, thank you.
You are welcome. That was a simple question I could help with. Sometimes they're not simple and I take forever and I still don't figure it out.
That's all I got.
Okay, well, what's your question, Melissa?
Okay, my question is with the cash account, what is the other account that is associated with it in this project? So if I credit the checking account, which one will it debit? I guess I'm wondering which account is associated with the checking.
So when you first create your beginning balances, is that what you're asking, or just in general?
Well, yes, I created my beginning balance and then I made a journal entry to adjust it because my trial balance didn't match. I'm not sure if that was the right thing to do or not, but that's what I had to do to get the trial balance to match up.
Let me pull up your account. Let's see what you have. So the trial balance, you did a journal entry to get it matching. Let's see here. So I'm still a little confused with your question because you have that beginning balance, right? And then
yes, that's correct.
Depending on what you want to do, it will depend on what the other side of the entry is. So the cash account you use for deposits, you use for checks, like bill payments you use for, I'm trying to think of credit card payments and things like that. Does that make sense?
Yeah. Well, I guess my question was when I did the opening balance, it went to the opening balance, which I had to close.
Oh, okay.
Put it into the, was it retained
Retained
earnings? Now I'm
earnings.
forgetting. So
Yes.
from here on out, does it go to retained earnings?
So from here on out, it's going to go to whatever the transaction is. So
Okay.
with these beginning balances, the system doesn't really know like where it's coming from. So it just puts it in that opening or beginning balance, opening balance, because that's the default. As you create an account and create a balance in there, unless you tell it otherwise, it's going to put it into that opening balance. And that's an equity account that essentially is your retained earnings.
Okay. So I was
from
okay
here on out,
to make that journal entry?
yeah, what you did looks fine. Looks, yeah, just fine. And even with the opening balance account, it would be okay to be in there as well.
Okay,
Not a big deal.
great. That's what I needed to know.
Okay.
Thank you.
You're welcome. Any other questions? Let's see if I have any questions from previous classes that I've had. Yes, so I want to make sure you guys are aware that inventory and how you manage inventory, like timing of the inventory of purchases and sales, is really important to match what the documentation shows. Because if not, you can get out of balance on your inventory levels, which skews your COGS, which is the cost of goods sold. And because of your inventory purchases, it changes what the price you have calculated. And I just want to make sure you guys are aware to pay close attention to that. Let's see. Rose or Magdita, do you guys have questions?
I have a question, but I think it was the same as Melissa. I'm not sure because in my trial balance, the balances show very different from what it should be. It has a balance on opening balance of 185,360, and yeah. So it is something, I don't know if it's correct, if you want to check it.
Yeah, I'll jump in there. Yeah, so let me see. So you have retained earnings of 2,200, and then you have an opening balance equity of 185,360.
Mm-hmm.
And that is completely fine.
Okay.
And let me show you, and I'll share my screen just for, I guess, learning purposes, and what Melissa was talking about as well. What Melissa had to do was she did everything to the opening balance equity. Melissa, did you actually go in and change all these accounts receivables and everything else to retained earnings? Or is it just the cash that you changed it to retained earnings? Does that make sense?
Yeah, and now I can't remember. It was several days ago. I'm sorry, I don't remember.
I changed all mine to retained earnings,
Yeah,
each one.
and that might be something you want to do, but again, for my purposes, they're both equity accounts. It's not a big deal. If for grading, I'm going to grade it as an equity account anyways for retained earnings and opening balance. But if you want to, you could just put it to retained earnings like this on each individual transaction. Save and close. Another option is, let's see where we got here. Report. Another option is simply just doing a journal entry. So moving it from opening balance equity to 5360, and it will show a 0 balance here. Or we can go into each individual line item and change it if we want. But again, it's not a big deal just to leave it as is, but it's always going to be there because it's an opening balance equity account. It's not going to go into retained earnings like your income would after a year roll forward. But does that make sense, Magda, that you could go in and change these transactions and make it a retained earnings account if you want to do that?
Yes, yes,
Okay.
thank you. Now, it has like in the PDF, it has the opening balance equity as 3,000, but in the list of accounts, it has it as XXX9. So do we change it to 3,000 or do we leave it as the X9?
You can just leave it as XXX9. Yeah.
Okay.
I think if you do it just like the PDF shows, it would be the cleanest for grading purposes. Again, I'm not going to dock points really for changing it and making it your own, like your own chart of accounts. As long as it's set up as an equity account and it exists, then that's fine. The issue is simplifies it for me for grading purposes if they're all exactly the same. So everyone's books are exactly the same. But I'm not going to dock you points if you change it. So.
Okay. Thank you.
You're welcome. Let's see, Rose, do you have a question?
Sorry, my washing dishes while I'm listening. No, I don't. I was just following along to see if there was something I had missed this week.
Okay.
Thank you.
No problem. I do that also. Trying to think. Are there any questions? Let me look at my notes about this week. I try to keep notes on things. Let's see here. Hopefully everyone's gotten the invite to get into QuickBooks Online, get into your account. I see some people haven't either set it up or haven't been able to get access to it. Hopefully, I'll probably reach out to them individually and resend the invitation. But reach out to me if you can't or you weren't able to get access to it. Let me see here. File balance. What's this? Yeah. Okay. Well, I don't really have anything crazy that will pop up. I think it's just follow the instructions, read it carefully, pay attention to the dates and the amounts. So be very deliberate on what you put as the date, because if you put the wrong date, it screws things up basically. And it causes errors just for a timing issue. And that isn't, you know, uncommon in the world of accounting either. And it's something we simply say it's a timing issue, and it explains a lot. Whether it's in the wrong month, it's in the wrong period, it's going to clear next period. It's just a timing issue that clears itself if you know that that's the case. But that's a acceptable answer in the professional world, but in this class it is not.
Could you show us on QuickBooks what you were talking about as far as inventory and not getting it mixed up? You made a comment a few minutes ago to be careful with the inventory.
Yeah, let me see. I think I have a demo company. I haven't set up the demo company very well. Let me see if I have my inventory in here. I should spend time and set up my inventory to set up everything myself. Yeah, so let me, oh, so let's see, screen share, products and services. So just be cognizant of like the sell price, the cost, the quantity on hand. And then as you make your transactions, like if you go to purchase inventory, or if you go to sell inventory, make sure you have, let's see here, choose a vendor. I have a test vendor category. We don't want to do that. Let's do items and details. We have my one inventory. Make sure the date, like the bill date and due date and all the activity is accurate. Because a key piece is if you buy something on, let's say the 5th of October, but then, or let's say you sell something on the 5th of October, but you're not getting stuff in until the 7th or 10th, you might go negative for your inventory, or you might, you know, show inventory that doesn't really exist just because of date and what you put as your date and your purchasing time. So that's a key piece. And then your rate, this all flows through of what you set up previously, on what you sell it for. And the purchase price is important. Do you want to leave without saving? Yes. Like this is the sales price. The cost is 15, quantity on hand. But the cost is $15, so that's what you're buying it for. And if you don't, later on in the year, for our financials in the year, you'll change this cost. And if you don't change the cost, then your expenses won't be accurate. And it'll mess up your margins on each item. And it'll also mess up some of the reports that I grade, essentially.
Okay.
Yeah, so really it's just be cognizant of the numbers you're using and the dates that you're using, so you don't mess up how the system is tracking your activity.
That makes sense. Thank you.
Yeah. Other questions? I think Vanessa, did you have questions?
Yes, I do.
Awesome.
Okay, my first question is still on the other assignment. I just want to be sure that I got it right. You know, the 401k that we do on the employer portion payroll. I noticed that I got it wrong last time because it's divided by 2. Is it divided by 2 because we share it with the employer and the employee?
Yeah, so the employee portion is the full amount, but then the employer portion, there's 2 different journal entries.
Yeah, I'm talking about the employer one.
Yep. So
And
let me
then
pull up
the
that
matching
spreadsheet.
expense.
I'll pull up that spreadsheet now. So this 401k matching expense,
Yes.
and up here it says the company matches 50% of the employee contribution.
Okay,
And there's
so
a few
that's
people
why.
that, yeah, I got that wrong, because over here, what the employee puts in, and I recognize that for a good number of you guys that aren't from the US, 401ks might be odd. It's not something that you guys do in your country. But for a 401k, whatever the employee puts in this case, 1923, then the employer would match 50% of that. So the employee portion of the payroll, you put the full 1923, which the employer will collect that money, add their addition to it, which is 962, and then the employer pays the total 2885, sends it off to a 401k manager that puts it into an investment fund, depending on who you have as a 401k provider. They would put it in, stocks, bonds, whatever they have. But yeah, so the employer portion is the matching portion, just the 50%.
Okay.
But what you take from the employee is the total amount that they elect.
Okay. So that was one of the questions because I wasn't sure. The other
Yeah.
one is on Cookbook Online. I noticed that the products we have doesn't have taxes, so we're not gonna work with taxes.
Are you saying the products in QuickBooks?
Yeah.
So in the PDF, as we purchase things, we're not paying taxes. And this comes into the question of sales and use tax for resale. And in the US, you don't have to pay taxes on things that you're going to resell. And that's going to be a exam question as well, if I remember correctly, is why don't we pay taxes on the things we buy for, like, our inventory? And that's because we're buying it to resell it. However, on other things that we buy, like maybe a computer or things that we tend to, or that we're intending to use in our business, we would have to pay taxes on that. But you don't need to break it out for purposes of bookkeeping or expensing. You just have to book the full amount. Did that answer your question, Vanessa, or were you talking about something else?
No, yeah, I just because last time we did work with taxes when selling, and then I was just worried because my setup has a tax setting, and then I was wondering because I didn't see anything on it, so I was just unsure if I'm gonna leave the taxes or not. So in this case, we're not gonna work with taxes, so I can just remove it.
Well, actually, we will be working with taxes when we sell things. So when we purchase things, we're not working with taxes, but when we sell things, like our invoices will have, well, actually, on our sales, we're selling to like bulk, or we're wholesalers and we're selling wholesale to other companies.
Yeah.
And these other companies won't be charged sales tax either because they are buying to resell. Like Weather Sports Co. or some of these other ones. Let me see. Wasatch Outerwear is us, shipped to Johnson's Outlanders Co. So that's Johnson's Outlander Co. buying from us, and it's wholesale. So we're not charging them taxes. But eventually, later on in the year, we're actually going to ship or sell straight to consumers.
Okay.
And when that's the case, then we will have to have taxes added in. But it'll tell you when to do that. And right now, it's not telling you to do that.
Okay.
So just the total is the total. We don't have to worry about taxes.
Just another one. I noticed that we don't have the lower amount of stock. Can I just put a number, or do I need to leave it blank because in the future we're going to work with it? Lower stock.
You can just put a number for now, and if it comes up, you can change it.
Okay.
Like a threshold, a restocking, or out of stock, or purchase. What are they called? What's it? Is it labeled in QuickBooks? I can't remember. But yeah, for now,
Yeah, they
just
put
you can
like
leave it
a
blank.
start point.
Yeah, reorder point. That's what it's
Yeah.
called. Yeah.
Okay. I think that's it.
Okay. Well, cool.
Vanessa, were you asking on the chart of accounts why there is an account for taxes? Was that your question?
Yes, because like I said, on my setup, it appears because we did last time. And then I do have two taxes account that is not on the chart of accounts. And that's why I wasn't sure, because I tried to remove them, but I can't remove them. But I guess it's because the setup, I put taxes when I put a setup because I know we are going to sell. And then I didn't see any taxes, and then I got a bit confused. But yes, I do have two accounts for taxes on my chart of accounts, and there's none on the one we are working on.
I have a payroll expense on my chart of account. I don't think I have one for taxes. Maybe I
Yeah, you have a
deleted
payroll
something.
tax payable.
Oh, let's see.
But yeah. But if there should be a button that says charge taxes. And I think later on in the year, it will have you set up your tax collection and tax activity. And if you do that, it actually sets up your tax accounts for you. And it won't let you delete them because the system forces you to have them. And that's probably what you did, Vanessa, that you click the box that says, we're going to do taxes. And then it sets up your accounts for you. And it won't let you mess with them because it's a requirement that you have those accounts set up because it feeds in the activity for you.
That's why, I mean, because I saw that we're going to work with the wholesale and it's a selling, so I just thought, okay, we're probably going to do taxes as well. So I did add on the beginning when I create the account, and then they appeared, and then when I start to put things in, I noticed that we are not doing taxes, and then that's why I got a bit confused.
Yeah, I see that you have sales tax payable. Utah State Tax Commission, and then out of scope agency payable. But those are both sales tax payables, and it's associated with how you set up your inventory or your sales process. And you selected that you're going to be doing taxes. But for now, until you see that come through the PDFs, it should have a zero amount, or you'll select to,
Yeah.
you know, have the zero amount applied.
Okay.
Yeah. And sales tax is a whole other beast nowadays because of e-commerce, and it's called a Wayfair ruling, where the state of, I think, Massachusetts or Delaware filed a lawsuit against Wayfair, the website, that they weren't collecting taxes on their sales, and the state was missing out on a ton of tax revenue. So now the law is, if you reach certain hurdles in certain states, then you have to collect taxes and pay those taxes in those states. And it's been a huge issue for e-commerce businesses because they sell across the nation, and they have to keep track of it, and they have to submit taxes, and they have to pay the taxes. There's been a few companies that have popped up just to handle that issue. But anyway, I digress. Any other questions? No? All right. Well, if you guys don't have any other questions, and for all those of you that were able to make this call, you know, watching it, please feel free to email me, and I'll try to get back to you as soon as possible, answer any questions you have that you're working through. But for now, I guess we'll say goodbye and stop recording and sign off.